Hello, everybody, and welcome back to How to Blockchain. It's going mad in crypto land at the moment, and I'm back with a very special video with none other than blockchain beard guy, Mr. Kris Bennett, the person that I always go to for guidance when big, scary, dangerous, difficult things are happening in the world. And I read a blog post of his the other day talking about what's happening with Bitcoin, what's happening with the crypto market more broadly, and some of his advice specifically on, as a blockchainer or as a non-expert, how to think about what's happening. It's an incredible time to be alive right now. It's incredibly interesting. From a technical standpoint, it's quite a challenging time to be alive if you want to get out in the world, travel and hug people. But apart from that, when it comes to technology, when it comes to digital transformation, we're at a really interesting time in everyone's lives. And the blog that I saw from Kris actually took me back to a conversation that we had, I think about 2018, walking through the streets of Dublin. At that time, Bitcoin was something like $17,000 or something like that. And we were having this sort of back and forward discussion around, why do you think that is? Why do you think this is so popular? What do you think is driving the price? Why are we seeing it? Why now? All of these sorts of conversations. And I guess 3 years later, sort of Kris came out, distilled all of that thinking into a beautiful blog post. And I would have been remiss if we didn't get a chance to share that with the rest of the group. So Kris, welcome back to How to Blockchain. Hope you're doing well.
I am honored to be here. Thank you for having me. We don't have nearly enough of these discussions, so I always treasure the ones that we do.
As do I, Kris. And honestly, you have a really, as a teacher, as a guru, as my North Star in the blockchain world, you have a really nice way of coming and presenting complicated, challenging issues around blockchain in a way that isn't particularly polarizing, right? We're not trying to say Bitcoin is dangerous. Bitcoin isn't a good thing. Bitcoin has been hugely transformative in a number of different industries. What you put out there really is more about how to think about what we're seeing now. There has been far too much hype in and around blockchain and digital transformation, digital assets, virtual financial assets, distributed ledgers, call it what you will. We don't need more hype. But when you start seeing Bitcoin and Bitcoin price on the front page of the Financial Times, you know that something's about to happen in terms of the rest of the world's reaction. So I want to start with, what are you seeing, right? What has just happened? It's January 2021. We've just been through a really interesting period in and around digital assets and cryptocurrency. Tell us what you see and why is it important to take stock of what's happening around us right now?
Yeah, so first of all, what are we seeing? Well, I think we're around the $40,000 mark. I know we crossed it briefly last week, and we may be over it again. So we're seeing a lot of new folks getting into blockchain, into the crypto space, trying to figure out what all this is about. And as our President George W. Bush once famously misquoted, "Fool me once, shame on you. Fool me twice, won't get fooled again." We've seen this happen before several times. And I was very concerned that there are a lot of people getting interested in this space for the very first time who maybe are hyper focusing on a very, very small part of what is a very fascinating larger picture. And sometimes if you don't see the rest of the picture, you don't quite know what you're looking at, or you maybe would come back and look at that thing a little bit differently. So I just kind of wanted to talk a little bit about blockchain and how it fits into this larger idea of Web 3.0 and what are these web generations, and why is all of this so exciting in the first place? And it's kind of this continuation of a trend that we just see play out time and time again in technology, which is this idea of decentralization. So 70, 80 years ago, we're really starting to create in earnest the world's first computers. You can go back before that, of course, to Charles Babbage and other folks like that. But, this is the first time we really have workable computers. And for the first time in human history, we're able to perform more calculations outside of the human brain than within it. So, it was very common at this point in time to go look in the help wanted ads in your local paper, and you would see companies hiring for a computer. This used to be a job. Someone would ask you, well, what do you do for a living? Well, I'm a computer. And that just meant that you spent all day performing calculations for things like payroll or inventory or financial management. Well, now we could start to offload some of that work. So in the early days, everyone was just excited about this fact that, hey, there's now a machine that can add up numbers faster than any human being on earth. And that's what we focused on. Nobody was thinking about the things we're talking about today, like the rise of artificial intelligence. How do you teach machines and silicon chips to make moral decisions? But these are going to be pressing conversations in the coming years and decades and perhaps centuries. So there's kind of these twin themes that every time something exciting and new and revolutionary happens in technology, it's a move to decentralize. And the thing that we focus on right away is usually not what ends up being the important thing. So same thing, PC revolution. Now we can all have our own personal computer. I don't have to go to the university and rent time on the mainframe, right? I don't have to use the corporate mainframe at the head office. I can have a computer right here in my home. Well, at the time, we were all geeked out because this meant we could play Pac-Man at home. But the implications of that have become much bigger. Nobody thought in the early 80s, all that was eventually going to become this little supercomputer that you keep in your pocket. And what are the ramifications of that? So again, the thing we're focused on initially, it just ends up not being the real core, the real kernel, or the real significant thing. And we saw this with the internet, with Web 1.0 and 2.0 and the rise of social media. Think back 10, 12 years when you're first getting on Facebook. And everyone's excited because, hey, I can connect with all my old high school friends and share pictures of the kids that we've had and the family vacation. Nobody 10 years ago was talking about social media the way we're talking about it today. How does it fit into a functioning democracy? How does it affect things like self-esteem and self-image and the perception of ourselves within society? So now we're kind of seeing the same thing with blockchain and Web 3.0, and everyone right now is hyper focused on Bitcoin and cryptocurrency, and we're going to redefine finance and change the world. And kind of the analogy I made is, that's like looking at the space shuttle and being impressed at the engineering behind it because the wheels are round. Well, technically you're not wrong. But if that's the only thing you're focused on, you're really missing an amazing bigger picture. And that's, whether you're bullish on crypto or whether you think it's all a scam or a fad, either way, I just want folks to walk away and see that when we talk about blockchain, cryptocurrency and Bitcoin is that very visible tip of the iceberg, but there is a lot that's happening underneath the surface that in my mind is much more consequential.
Exactly. And what we've seen over the last sort of month or couple of months, if we've seen a dramatic rise in the price of Bitcoin, right? We've seen to go from $20,000 breaking through the $30,000 barrier now for a period over 40,000, and a very dramatic increase in pricing sort of just around the end of the year 2020 to where we are now. And I think where you put it really nicely is, there are lots of people saying that this is it, this is now, Bitcoin is going to become one of the most important asset classes in the world. Again, no hate towards Bitcoin. The point here is not that. This is primarily around education. This is something that everybody's going to be into. It's going to be, $1 million per Bitcoin in a period of time. We know that there's limited supply, so therefore the price can only go up. Lots of confusing messages, lots of social media relating to it, lots of people who hold Bitcoin putting out messages saying you should really buy Bitcoin right now. A lot of interest, a lot of excitement, a lot of hype. But the way you phrased it, I think, was really interesting. You said, don't spend too much time lauding something. I'm going to use my words, not yours. But don't get too much time lauding something if you don't understand what drives it or how it works, right? If you're there to help other people. So I just wanted to double click on that for a second.
Yeah, I think you could go through so many of the headlines that we're seeing around Bitcoin and cryptocurrency right now. And you could go back 2-3 years to the end of 2017, 2018, or some of the other exponential price increases. And I would be willing to bet if we just clip some of those headlines and we took the date and blurred it out, and I said, okay, which one of these headlines is from today and which is from 3 years ago, you're very likely going to have a tough time telling the difference. And to me, I'm not making any judgment one way or another about whether this is the actual revolution or if this is the time it's going to go to 100,000. But so far, nobody that is advocating for a continued rise in price has been able to me, sufficiently explain the fundamentals that led to what happened in 27, 2018, or some of these other times where we've seen the price chart literally look like a hockey stick only to come right back down. So I'm a little skeptical of someone who claims to know with great precision what the future is, but is still so incredibly murky on what happened in the past. And I also think just in general, be careful taking advice from anyone who has something to gain by the price going up or down. You might not be getting that objective opinion you think you are.
That's a really good way of putting it. And look, to be clear, none of this is financial advice for anybody out there listening. This is two guys with beards talking about their perspective on blockchain and crypto. But I think there are
probably financial disadvice, if anything.
Yeah, we are definitely not going to start it's any sort of crypto fund anytime soon based on this conversation. But I think there's probably a few important, interesting analogies or I don't want to call them facts, observations to put out there. Is when we look at stock prices, when we look at currency fluctuations, some of the more established instruments that people invest behind, if you look at the price of stock, yes, there's always going to be some degree of speculation or the market's perception on whether something is good or not. But for a stock price, it's usually anchored to some extent in macroeconomics, the particular drivers of a business, whether that's raw materials, whether that's demand, whether that's pricing, whether it's supply, the P&L of that particular business. There will be some degree of objective metrics that over the time the world has been able to anchor itself around to say stock X is going to go up or down. Or currency X or Y is going to be in higher or lower demand. It is still based on predictions, right? And we cannot predict the future with any certainty. Hindsight is always 20/20. But to some extent, there are some objective metrics you put around that. So analogy one is, how does this compare with the predictability of things that we can see in the world? I'm not sure whether the global automotive market or the global healthcare markets are any more predictable than cryptocurrencies, but that's kind of thing one. Thing two in and around Bitcoin is you've still got 2% of the wallets holding 95% of the value, right? So there is still a very consolidated supply. And as a result, the implications or the ability for those wallets or those providers to have an influence on pricing very, very quickly is a thing, right? Whether we like it or not, it is not a pure market. It is not a perfect market. It is not a high transaction market or a very democratized market at this point in time. It's open for all. It's very available for all, but that's a part of it too. So the market drivers in that space are there. The other things that we're hearing in and around this, and this is interesting, right? This is exciting. Seeing institutional investors, large hedge funds, large banks taking positions on Bitcoin is interesting. Seeing some corporates or enterprises, I think the phrase is having Bitcoin on the balance sheet as an alternative hedging approach to the US dollar. Okay, that's interesting, right? That shows creativity and innovation. But if you don't like the dollar, there's always the yen, the pound, renminbi, whatever you like, right? There are other alternatives, gold, silver, other asset classes. There is upside in Bitcoin from its volatility that we've definitely seen, but as an alternative to other hedge methods, let's see. This is definitely not my area of expertise. So institutional investors stepping in, mom and pops and the average Christmas peak as people gift Bitcoin to each other. Super, super interesting. But again, 95% of the Bitcoins are still in 2% of the wallets. So it's not democratization or new entrants into it that's really necessarily driving it. So there's a real dichotomy of different factors playing out. And we don't really know necessarily how much any of that is really impacting that price. And it's certainly not to that scale, right? Institutional investors coming in, you would want to be seeing billions and billions of demand from large banks to be able to see that. You would want to be seeing hundreds of millions of customers flooding in to see exponential growth. But I don't think that's what's happening. I don't know. How do you see it, Kris? Are these some of the factors that concern you, or what else are you seeing that I've missed?
Yeah, so I'll preface this by saying I'm not saying anything one way or the other about the long-term future of all this. We have to, again, I think it's so important to look back at history for context, but for a significant amount of time, sending an email was more inconvenient than sending someone a fax. If you just wanted to send someone a digital message, you didn't want to have to put it through the mail. Well, sending an email was a lot more work, because you had to get a modem and you had to get the drivers to work, and it wouldn't work with your version of DOS, and then you have to plug it in, but someone else is on the phone, and then you dial into the dial-up servers, but they're all busy. So I just walk over to the fax machine and put the piece of paper in, and you get it out the other end. That doesn't mean that there wasn't a future for email, and today's world is evidence of that. So I tend to look at Bitcoin and cryptocurrency in the same light. But that being said, I do think there is a bigger discussion that needs to happen, because there is this tragedy of the commons scenario, where if Bitcoin and cryptocurrency is going to be the thing that all of its advocates and proponents want it to be, it does need to be very democratic. It does need to be very evenly distributed. What was it, 95% and 2% of the wallets? That is not the ultimate vision of something like Bitcoin. But that kind of hoarding or HODL mentality is what is prophesized and espoused as the right way for an individual to approach the market and Bitcoin ownership. So to me, I see this fundamental incompatibility, this tragedy of the commons. And I'm not saying that we land one way or the other on that, but for this thing to really be taken seriously in the way that its advocates propose that it should be, I think we first have to have that discussion, and we have to come to resolution on that. Is it something we're creating purely for individual benefit, or is there a larger social good or social agenda that we're trying to push with it? Because it may not be able to be both simultaneously.
And I think that's a really nice part, right? Is there's Satoshis Whitepaper, and there was a description of the capability and the technology and how it works. And this is why I call it blockchain won't save the world, is technology in and of itself doesn't have a purpose, right? Email is not out here with a prophecy saying, you may only use email for this, and anything else is against the way that I have foreseen it happen. It's like, no, technology is there to be used. And I think that there's some wonderful stories coming out there of people who've appropriately read the market or got in early, paid off their parents' mortgages. As a speculative asset class, that's really interesting, and those are good news stories. I'm all for them. If you look at the broader story about digital twins, about virtual financial assets, around tokenization and the opportunity that tokenization presents in the trillions of dollars of efficiency, or putting nominal values to things today that don't have values, or to be able to create new data assets that can be monetized in smart cities context, in IoT context, in automotive, and so on. This is the really exciting part that, again, is still very, very nascent in terms of scaling. Loving the things that the guys like IOTA or Ocean Protocol or EOS or Ethereum 2 are doing to enable the tokenization or the digitization of physical real world assets, or the ability to allow business to business transactions that can make access to capital easier. A new model for VCs. We already saw ICOs as a model of being able to raise capital, be they flawed in certain ways, great in others. This is the exciting part around virtual financial assets or digital assets, that I think, back to your look at the round wheels on my space shuttle, this is the bigger story. And I think those who are in blockchain probably get that. And I think that they're interested to say, we can clearly draw some separation between the price of Bitcoin as a speculative asset and a way of being able to put money into that as a private individual, or even as an organization who has an investment arm, right? It's an asset class. I can put money in, I can get returns. That's cool. but your Bitcoin's over here doing bits, no pun intended, but all of the really exciting tokenization stuff over here, please don't forget that's here, because this is the thing that we really want to enable. Because while there's $1 billion or $1 trillion of market cap over here, there's many trillions of dollars in business enablement, or helping startups, or helping corporates, or helping individuals to grow, that we still have to enable. And that's the bit that I think you and I and others really want to make sure that we don't miss this stuff over here, because this stuff over here is happening.
Absolutely. Again, the first thing we get excited about is historically not the thing that ends up being significant. And I think we're so much in that space. And I also think, unfortunately right now, and I kind of straddle both sides of this, there's a wedge that is getting created where it doesn't need to belong, between the folks who are very excited about blockchain and decentralized technology versus the people who are just hyper focused on the cryptocurrency market. And a lot of misunderstanding between those two camps is driving this wedge between them, when really they should be working and talking together. Because, and again, this is just my opinion, but if you have this thing that functions as if it were money or some type of digital asset, but you don't have a way to link it back to anything in the real world, you're kind of only looking at half the picture. You've got the volume up on the TV, but not the display on, or vice versa. You're not getting all the information that you could be. And same thing on blockchain. There are a lot of blockchain purists who are trying to stay so far away from the cryptocurrency side of things that they're wandering away from good solution architectures that involve tokenization and use of coins outside of cryptocurrency.
You're right. And it's a very broad spectrum, right? Take one of my favorite examples, the ability to do high volume, high throughput, machine to machine transactions, where you've got smart cities or automotive use cases where vehicles are communicating with each other, or you're passing particular information, or data is monetized, whether it's sensors picking up potholes, or whether it's paying for per mile or parametric requirements in and around. You cannot do that with you can, but you probably should not do that with a Visa or a MasterCard, because you're going to get stung with a very high cost of payments. The critical enabler for a lot of the IoT, high volume, high throughput, machine to machine use cases, there needs to be some sort of method of keeping track, or for reconciliation, or for payment. And there are a number of different, what you might call cryptocurrencies or digital assets, or different names, that are critical to enabling transformation of those sectors. This is, I don't know whether you'd call it good crypto or whatever it is, but that still sits in the broad bucket that we call cryptocurrency. But it's a critical enabler for an enterprise use case. So I don't know whether somebody has done a better spectrum on this one, but there's kind of the Bitcoin as an individual asset class. There's the central bank digital currency stable coin enablement of the decentralized finance, or those kind of the transaction landscape in and around blockchains, which is super important, right? We cannot exist, or we cannot transform in the way we'd like to without those enablers. And then there's, shitcoins, which, we all know where those are. And if you want to find out more about shitcoins, just spend some time listening to Samson Williams. So I kind of feel that's where we land. I guess there's a couple of other observations, or it's kind of under the box of what do we do next, or what else do we need to solve? Because you made a point there which says, in most cases, I can't pay my rent with Bitcoin. At the moment, Bitcoin is not money. Bitcoin is not blockchain, and Bitcoin is not legal tender. It is an asset class. It is, and some people see as a safe haven. But I can't pay my taxes in Bitcoin. There are not many regulators out there that have come out and said, you can pay your taxes or you can pay your bills in Bitcoin. There are people out there who will accept barter, or who will be able to kind of cover that. But for the most part, the people who hold Bitcoins will probably still have to pay their rent in dollars, or in yen, or in whatever currency that they're required to pay. So it is only value at the point you cash out at this point in time. So again, back to it being a little bit complicated to send an email back in the day, it's still a little bit complicated to use Bitcoin. And it takes me back to the Blockchain Won't Save the World episode I did on Malta, and Max Ganado, who is an absolute brilliant thinker in this space. And the challenge is what we're enabling is borderless transactions, borderless interaction, borderless ecosystems. But we still have to somehow anchor those in the real world. We exist as citizens of certain countries. We pay our taxes, or we choose to opt in to that model of society. Decentralization, the promise of decentralization, and this is getting a little bit deep. I promise not to go too far on this. But the concept of the idea of decentralization is you can be a global nomad, you can be a citizen of the world, transact only in Bitcoin and never pay your taxes anywhere. But at law, I'm not sure if that's necessarily justifiable or that's a defensible statement. Because you are going to live somewhere, you're going to buy your groceries, you're going to pay your rent, you're going to drive your car in places where the roads are taxed. Somewhere, somehow, if you want to make use of those services, then there's going to need to be some sort of backtrack into the real world. And the challenge is, how do we reconcile the digital decentralized world with the realities of jurisdictional law? And let's not do a deep dive on that one. But that's just one of those problems that I see we have to solve. What else is on your bucket list to help us kind of bring people into this transformation appropriately?
I'm a big believer in simplification. And if you've gone through any of our classes, you've heard me beat this drum relentlessly. But but before you open up your wallet, before you invest, before you really buy stock in, hey, this is the way of the future, ask yourself if you don't understand it, because it actually takes a very wise person to say, hey, I don't get it. Break it down for me, explain it simpler. Anyone who can't explain it to you in a way you can understand it very likely doesn't understand it themselves. And I would question if that's someone you want to get advice from. And then I'm really dating myself here. You'll remember this. I'll remember this. Anyone under 30 won't. But way back in the day, there used to be shopping malls. You'd go buy stuff in person. And, 30 years ago, in the malls, they'd have these posters, and you'd look at them and they just look like a bunch of digital confetti, a bunch of nonsense. And you'd stare at the picture and you go, what the hell is that? But the trick was, if you unfocused your eyes and you didn't stare directly at the picture, this three-dimensional image would pop out, a dinosaur or a sailboat or something like that. And I think Bitcoin and cryptocurrency, we're kind of in this similar space, right? Where the value of Bitcoin, for example, in my opinion, is not the Bitcoin themselves. Those are a byproduct of the valuable thing. The valuable thing is the ledger, the record that's being kept. If you and I bank at the same bank and I owe you some money and I transfer it from my account to your account to pay off the debt, well, how can we prove that I paid you? Well, the bank has this ledger. It has a record of it, and that's the service that the bank provides. And that's why we pay those transaction fees to make that transfer. Well, that's what blockchain provides, is that ledger. And the only difference between your bank and what's happening on Bitcoin is that ledger is not centralized. There's not a single institution that owns it. But I would love to see the conversation shift to that. I would love to see people getting excited about this space, carve an evening out and dive a little bit deeper into that idea. Because if you believe that the value of a decentralized ledger is greater than $40,000 a unit, well, then Bitcoin's probably a good investment. But if you say, hey, this is starting to get to or to exceed the price that a decentralized ledger is worth, maybe I could accept the same services provided by a centralized ledger at a lower cost, well, then maybe the asset is overvalued. But I see very little conversation about that underlying idea of what Bitcoin and blockchain really is. It's the shared record keeping. It's not the coin itself.
Love that, Kris. Radical simplification as ever. And this is why I see that you're such a powerful teacher, is that you've got a really great way of breaking down what is a very complicated domain into something that can be a few simple questions or a few simple ways of thinking about a problem. And frankly, if you start going down this rabbit hole and you find yourself interested, that's how I guess a lot of people's origin stories happened in working in blockchain or in digital assets or in other spaces. They saw something out there that was really different. Then they got hooked on the philosophy underneath it. Then they started getting into the mythology, started following the Twitter accounts, maybe even dabbled with a couple of Doge. And before you know it, you're a blockchain architect. And if that's the story that gets you to where you are, which I know is not an unfamiliar one, it actually is a really interesting entry point into what I found to be a very rewarding career, and I'm sure you have too. But again, thank you for the deep words. Thank you for the knowledge bombs. It's always a pleasure. This was designed to be sort of a video version of a free-form essay conversation around what we're seeing in and around cryptocurrencies, blockchain, Bitcoin, DLT, and all things. I hope as a community, you guys found this interesting. Every time I listen to Kris, I learn something new. I get a really interesting perspective, and it teaches me to be, as much as possible, less opinionated. What we want is to be balanced, is to be objective as best we can, to take the hype out of it and really get curiosity for what's going on. We don't know a lot of the time. A lot of it that we do see is prediction or is speculation. And that's exciting, right? We don't know necessarily how the future is going to unfold. What I do hope is that 2021 is better than 2020 in a whole bunch of ways. It's had an interesting start already. But one thing that I'm delighted to be able to say is that my first video of 2021 was with you, Kris. Shout to you, shout to Blockchain Training Alliance, shout to Chad, shout to Melissa, shout to the whole team. And thank you very much again for coming in and sharing your wisdom with us. We need to do more of these.
No, the honor is all mine, and I can't speak to the rest of the year, but any year that starts out with an Anthony conversation is off on good footing. So hopefully we can maintain the momentum. But no, this has absolutely been a pleasure. I always enjoy these kind of things. And if anyone ever wants to talk about any of this, get deeper into blockchain, come find me on LinkedIn, reach out. Always happy to have that conversation. We're all in this. We're all learning together. So the more we can be confused together and help answer each other's questions, the more we all win.